Welcome to the Be Smart podcast. Jared, how was your weekend?
Pretty good. I had some company over. A writer friend of mine, a guy that blurbed my book, actually, Blurb Night Moves. He's a terrific guy. He was here with his wife, and yeah, it was cool,
Last week, you were talking about how we'd be in for a bumpy ride this month. Based on what happened last week, it seems like you kind of hit the nail on the head there. Just some data to go through. In the first trading week of September, the S&P 500 fell 4.2%. Last Friday's monthly jobs report showed the labor market added fewer jobs than expected, and weak manufacturing data led stocks to their worst day since early August. Coming up this week, we have the final inflation reading before the Fed does its thing next week. What, if anything, do you think would have to happen for the Fed to cut rates 50 basis points versus 25?
First of all, let me just kind of unpack all the stuff you just said, right? So the payroll report I actually don't think was that weak. And I think the market's reaction to it was a little exaggerated. Um, we expected a job gain of 165,000 jobs. We got 142. Okay. So it was a miss by 23,000 jobs. The unemployment rate actually went down. The unemployment rate went from 4.3 to 4.2, and average hourly earnings were up. Like it was kind of a mixed payroll report. It wasn't that bad. I mean, look, like I'm short, so I was happy that stocks were down 2% on Friday. But I was shocked at the reaction on a payroll report that really was not all that weak. I think that the Fed is probably going to cut 25. And if you look at what the market is pricing in, it's pricing in about 75% chance of a 25% chance of a 50. I think it's going to be 25. You mentioned CPI coming up on Wednesday. We have the expectations for CPI are very aggressive. So last month was 2.9%. The expectations for this month are 2.6%. We're expecting a big drop in inflation. That is a very aggressive estimate. It's very optimistic. And if we had a 2.7% reading on Wednesday, you would see not just the 50 basis point cut priced out, you would see several rate cuts priced out across the curve. I think we would have a pretty ugly day if we got hot inflation numbers on Wednesday. So that's kind of how I'm positioned. I'm still short. I plan on cover. I don't. This isn't a position I'm going to hold for months. I plan on covering if we get one or two more pushes lower. But I just have to reiterate, like the payroll number was not that weak, and it's funny how there's all this recession talk, and it's. God, if you go to the airport, you can't find a parking place in the airport. The security line is an hour long. Everybody's flying. Everybody's traveling. Everybody's going out to eat. Doesn't feel like a recession to me. What does a recession feel like? I'll tell you what it feels like. March of 2009, I was living in New York City, and I took my wife out to dinner at Spark Steakhouse on a Thursday night, right? We were the only people in there. March of 2009, we were the only people in the entire restaurant, right? That is a recession, okay? It does not feel like a recession. Maybe, what I've been saying all along is that this is a normalization of the labor market after the pandemic stimulus. We had the stimulus, we had the job shortage. You couldn't get waited on in a restaurant. You couldn't find a plumber. Like we had this job shortage. And all this is a normalization after that stimulus. So maybe, the data has been slow for a while. Maybe GDP prints 2%, 1%, 0%. But I do not see a really severe recession coming at this point in time.
So do you think 50 basis points is off the table even in subsequent meetings? Or do you think maybe if the jobs data deteriorates like significantly, that could be a catalyst?
I think 50 basis points is off the table for September, unless unless, there are some doves on the FOMC. You have Christopher Waller and Austin Goolsbee, and you have some very dovish people on the FOMC who are very influential, and maybe they talk Powell into a 50, but I don't think the data merits a 50.
All right, let's go over to the market headlines from the Wall Street Journal here. Apple looks to AI to end iPhone slump. So as we speak, Apple's holding its annual product event where it's unveiling its new iPhones. Here's what really caught my attention though. The iPhone 16 lineup isn't expected to have many new hardware features beyond the usual faster chips and improved cameras. Instead, Apple is expected to promote its new AI feature called Apple Intelligence as a main selling point. I mean, does this make you want to upgrade your phone, Apple Intelligence? I mean, I think we've hit a wall here in terms of innovation, but what do you think? Is slapping AI with a cute little name on their phones enough to sell more of these things?
I kind of need a new iPhone myself. Mine is about 3 years old and the battery's starting to go. And I mean, I would like a new iPhone, just as kind of a luxury. There's, one of the reasons Apple has been so successful is because of planned obsolescence, right? Because you buy an Apple product and because of technological innovation, it's obsolete in 2 years and you have to buy another Apple product. But the gains in technology have been so incremental with these phones that people their phones have not been obsolete. Like I think I have an iPhone 13 or something like that. Like it's really fine. I can work with it just fine. There's no reason for me to get a new phone. And that's what they're up against. I mean, the funny thing is about Apple is that the product that they had the toughest time selling is the iPad, because the iPads don't have that technological obsolescence. Like they don't have they have a camera, but nobody uses them for the camera. Like it's just, there's an iPad is an iPad, and the newer iterations of them aren't really that exceptional. So, what do you do with Apple? Well, Warren Buffett sold Apple, right? So Warren Buffett sold, I think, most of his stake in Apple at this point. It's not when he bought Apple, it was a very cheap stock. It was trading at like 13 times earnings. I don't know what it is now. I think it's like 30 or 35 or something like that. It's a very expensive stock. I don't want to buy Apple. I don't think anyone else should buy Apple. I think it's kind of hard to be short. I think there's if you're looking for things to short, I think Apple would be pretty low on your list. Everybody has to own it. It's the biggest stock in every index fund in the world. Like so, I don't think it's a really good short candidate. But yeah, I have no interest.
I still have the iPhone 14, I think. So I skipped last year's. And it's funny because like last year, their whole marketing scheme was like, it's made of titanium. Like that's not a selling point to me. So I don't know. I'm interested to see what they're going to do. I mean,
well, titanium is very light. Titanium is very light. So that's, I guess true. I have a titanium watch. I have an Omega Speedmaster with a leather strap, and it's titanium, and it's a very light watch. So,
all right, next up, let's move on to politics without really focusing on the politics here. So from Reuters, Trump says he will tap Musk to lead government efficiency commission if elected. How do you feel about this?
I feel great about it. I mean, I tweeted about this. I said, if this is for real, like if this is actually going to happen, like this would, I think, be the most exciting thing about a Trump administration. Okay. And a lot of people forget, I used to work for the government. Okay. There is this, I'll say this as with my classic understatement, there is not a lot of pressure to perform in the government, right? Like if you produce a lot or you don't produce anything, like there really are no consequences. Rush hour in Washington, D.C. starts at 2:30 p.m. Like nobody is working really hard in the government. Musk, if you let that fox into the hen house, you would see massive firings. You would see people become a lot more productive. There would be huge cost savings to taxpayers. Like I think that's the best part of Trump's campaign. I really do. Now there's a lot of ifs, but I think Elon would take the job seriously. I think he would bring over some of his best people from Tesla and his other companies, and they would implement a lot of changes.
Do you have any concerns about it though? Like, how much can Musk juggle? Like you said, he's got Tesla, SpaceX, Twitter.
I think about that all the time. Like one of Elon Musk's underrated talents is his ability to recruit and manage good people, and motivate them, right? I don't know Elon Musk. My closest connection to Elon Musk is I have a Coast Guard Academy roommate who ran security for SpaceX. Okay, so he was the head of security at SpaceX, and he wasn't a direct report to Elon Musk, but there was one person in between him. And the only thing he said to me about Elon Musk, he said, Elon wore me out. And he worked at SpaceX for like 2 or 3 years, and it was so much of a pressure cooker that he left and did something else. Right. I mean, he obviously had a better opportunity and et cetera, but it was a high stress environment.
Biggest headline this week: Beetlejuice jolts box office with $110 million opening weekend.
I never saw the original Beetlejuice.
I'm kidding. This isn't really a headline. We're gonna
okay.
talk. Can you imagine if we just like talked about Beetlejuice for the rest of the podcast? All right, main topic here. You wrote about this a little on your Substack, and it's actually been on my mind for a couple of weeks: taxing unrealized capital gains. So for those who are not aware, Kamala Harris has endorsed the Biden administration's proposed tax hikes, and one of the more controversial proposals is to introduce a 25% minimum tax on total income, including unrealized capital gains, for those with a net worth over $100 million. How do you feel about this? I mean, this seems like a disaster to me.
Yeah, it's a disaster. What's funny is what I'm surprised at is the number of average people who have seized on this idea. And I see this stuff floating around on Facebook and Twitter and stuff where you have somebody who's an HVAC guy and he's like, I have a $400,000 house, and if it goes up to $600,000, then I owe 25% of the difference. And I'm like, dude, it's not going to affect you. It's going to affect people with 100 million in assets. But it's good that people are talking about it. It's good that people are deeply offended by the idea that you can be taxed on something that you haven't sold, right? Like just
Right.
the idea of that is very offensive to people. Here's how this works in practice, and this is why this is so bad. This is a tax on risk taking and risk takers. Okay. So if you have somebody that has a startup, they own 100% of a startup or 25% of a startup or something like that, and they have a cost basis of zero, right? Their cost basis in the startup is zero. And they get a funding round, then they're valued at 20 million, and they get another funding round and they're valued at 60 million. They get another funding round and they're valued at 200 million. And then they owe tax on those gains, right? But the problem is that if you owe 20 million in tax, you don't have 20 million in cash, right? So what do? So there's really two possibilities. One is you take out a loan to pay the tax, which is not good, because then what if the company fails and goes to zero and you're on the hook for a $20 million loan to pay tax and you can't pay the loan? Or you sell bits and pieces of your company along the way and you reduce your ownership over time, which is also not good. So, there's been variations of this around the world, mostly in Europe, over time. They're called wealth taxes. And Sweden has one, and Switzerland has one, and France used to have one. And what happened in France was they imposed a wealth tax on super rich people, and they actually spent more money trying to collect the tax than they actually collected in tax, right? Because a lot of this involves appraisal. Like if you have a private business, like what is it worth, right? Well, the government is going to get in the appraising business and is going to go to some, big company and say, okay, it's worth this. And the taxpayer is going to be like, no, it's worth less. And they're going to sue the government. And then you end up in court and they're going to spend tens of millions of dollars trying to collect this tax. And then the government is going to get tied up in litigation for years, right? So this is a tax that is not going to be effective. It's not going to raise any revenue. All it's going to do is piss off entrepreneurs and reduce risk taking. That's all it's going to do. So why do it, right? And the only reason to do it is because it's politics, and you're saying, well, this is class warfare, and we're going to go after rich people, and people don't like rich people, and that's how we're going to get votes. But it is a profoundly stupid tax. So the other thing I'll say about Kamala Harris, she did something that was smart. Was in that Biden plan, he wanted to raise capital gains tax, long-term capital gains rates to 44.6%. And people freaked out about that. And Kamala Harris said, no, we're going to have it at 28%. It's currently at 20%. Right now, long-term capital gains rates are at 20%. She wants to raise it to 28. I disagree with that too, but at least it's not 44.6.
I saw Bernie Sanders chimed in on that, was like, oh, it should be much higher than 28. This thing's being billed as like the billionaire minimum tax too, even though 100 million's a tenth of that. So I don't know. The whole thing is just bizarre.
I mean, if you want to tax rich people are not making their income as W-2 employees, right? So by raising income tax rates, it doesn't really affect rich people at all, because they're getting most of their money from capital gains and dividends, right? So then you have to raise taxes on capital gains and dividends, but then it has all this effect on risk taking and stuff like that. So, there's really no fair way to do it, right? So screw it.
This applies to investments as well, right? Are you saying like every year, if somebody's worth over 100 million, they have to pay unrealized gains on on stocks, and then say they sell, they've got to pay taxes again on these stocks. Is that right?
Yes.
Yeah, that's absolutely nuts.
Yeah. I highly recommend you check out the Substack I wrote. If you go to my Substack, we're going to get those bastards. It's called What Makes America Different. Check out the Substack, pass it around to your friends. Everybody needs to read it. Everybody needs to understand what unrealized gains are all about. So,
all right, the week ahead, we've got GameStop earnings tomorrow. You looking forward to that?
That's not even on my radar, my friend. That's not even on my radar.
I figured. Presidential debate as well. I'm pretty sure that's still on. I don't know.
Yeah, what I do with presidential debates is I don't have them on TV. I don't watch them, but I have Twitter up and I watch people's reaction to it.
That's a good way to do it.
That's the way to watch a debate, right? It was funny because with the Trump-Biden debate, the one where Biden was like all senile and old and stuff, like from the opening statements of that debate, I knew that Biden was screwed, like just by looking at the reactions to it, So I do that. Like, don't watch the debate. Just have Twitter up and see what they say about it. That's the way to find out what's going on.
It's like the play-by-play of the debate. Yep. Yeah, that's definitely what I'm going to do. Then Wednesday CPI, as we mentioned, along with PPI. Anything else on your radar that's notable before we wrap this up? Anything new in the world of private equity?
Well, there really isn't anything new in the world of private equity. The last piece of news we got was that private equity is rolling up youth sports. So travel leagues and stuff like that. So now instead of costing $200, it's going to cost $2,000, and it's a disaster. And I will also add that the private equity stocks are not going down. On Friday, when the market was down 2%, most of the private equity names were down like 1%. Today, the market is up about 1.5%. The private equity names are up about 3%. It is a painful short. But let me say this. If I'm wrong about the recession, right, and we actually do get a severe recession, private equity will not escape. They will not escape. And it will be ugly. So, but that's my thesis on that. So, but night moves. So today is Monday, the 9th. This is coming out September 23rd, Monday, September 23rd. So you can still pre-order the ebook. So if you're a Kindle reader, pre-order the ebook. It's there's no reason to wait for it to come out. And if you want the physical copy, September 23rd, that's when this is coming out. I highly recommend you buy lots of copies. Makes a great gift. Give them out to your friends. Don't give it to anyone under the age of 14. It's a little bit challenging, not age appropriate, but highly recommend you get it. So
It's nice that it's coming out before Christmas this year, so it would make a great gift.
Yeah, that was one of the things about No Worries, which when No Worries came out at the end of January,
Right.
and a lot of people said to me, "Oh, you should have had it come out before Christmas." There's upsides and downsides to that, right? Like the upside is it's a great Christmas gift. People buy lots of copies. The downside is everybody has the same idea. There's a whole bunch of books that are released in December, and then you're in competition with all these other books in December. So we decided to go with January, which I actually think was a mistake. I think we should have done it in November or December, but live and learn.
That does it for this week. Come back next Thursday for another banger. We'll be back. Jared, thanks for your time. I'll talk to you
Peace.
soon.
Thank you.
Later.